You don't really need to have a startup idea to be an entrepreneur. Just go work. If you really want to be in startups and be an entrepreneur, go work in a startup and you'll get your network. You'll get a great experience. You can be entrepreneurial at a startup and you never know, you might get lucky. I know people who were, just happened to be employee number 6 and an assistant at a startup and now they're retired at 30 because the thing blew up.
Hello and welcome to Exchange Traded People. I'm your host, Michael O'Riordan, and today's guest is Matt Bucklin, founder of ExchangiFi. Matt, welcome to the show.
Thanks for having me, Michael. It's exciting to be here.
Oh, it's great, it's great. So Matt, I kind of like to dive straight in and get down and dirty with people and find out about who they are and what kind of made them the people they are nowadays. So my first question, which is typically my favorite question of all, is when you were a kid, what did you want to be when you grew up?
You probably get a lot of the same answers on this podcast.
I get a lot of astronauts.
Oh, astronaut. I visited Kennedy Space Center and I did like that, but I assumed that the answer, I've listened to a few of your episodes, it's a great podcast. I assumed that it was always something general in finance, which is what it was for me. But the reason is, well, maybe the same for a lot of people. I grew up in a really special place called Northeast Harbor, Maine. My family had owned a construction company. I was the firstborn son. I was fifth generation in this construction company. And we were working on all these big, beautiful houses owned by people like the Johnsons, the Fidelity family, and the Davises, like Shelby Davis, Select Funds, George Putnam, and the Mellons, and William Blair was up there. And I thought, these are really nice houses, and they have nice boats. Maybe I ought to do what they do. So I didn't really know exactly, but I was drawn to something related to finance and investments as a kid. And I'd watch a lot of CNBC and read investment books and study economics at an early age. And so I tried talking to people up there who were into it and learning from them and about what they do. And I knew that was my general direction.
Wow. So like when you're reading what age are you when you're reading investment books?
I mean, sophomore in high school, I'd get up and make breakfast at 6 a.m. and watch CNBC.
Oh wow. Okay. Just your regular kid, yeah.
Yeah.
Cool. So you're kind of like, we'll get to ExchangeFi in a minute, but you're like typically on this podcast, it's people who work in the ETF industry. They've always, there's a pretty linear path to where they are like to now. Like yours is not a linear path. So how did you kind of like talk us through to, okay, you liked investments as a kid. You probably, I don't know, did business studies in school or whatever, or university, and tell us about your kind of career up to where you are right now.
Yes, this was not straightforward. Or looked at my LinkedIn, or it's weird. Like most entrepreneurs, actually, and luckily learned at a younger age that I'm maybe not a finance person, but more of an entrepreneur. I went to the best college I could get into at the time, was Colby, but they had a great economics department. Bob Diamond was an alum there, and so anyone interested in banking could get an internship at Barclays Capital at the time. So I did that in London. I also interned at a place called WP Stewart, which is a big publicly traded asset manager. Bill Stewart was up in Northeast Harbor as well. And I got job offers from both. I took the WP Stewart one. I thought that would be probably easier. Maybe I could stick with it longer. But in the time between accepting that job offer and graduating my senior year of college, the things happened there. They moved to Bermuda. The job fell through, but I was still set on moving to New York. So I kind of scrambled to find a job, and I luckily ended up with a startup called MDRX Financial. It was started by a couple of W.R. Grace, Peter Grace's grandkids, very smart, entrepreneurial guys. I'm very lucky I ended up with them because I learned a lot about. I was in finance and doing interesting work, selling data and talking to hedge fund analysts and healthcare sector, but it was really more entrepreneurial, and that's what I learned from them. Then I turned 25. I thought there's some things I want to do before I can't do them anymore when I get too old and get married, have kids, whatever. I wanted to be in the military and I wanted to try working in the family's construction company. Like this, it was a pretty decent sized company. It'd been around a long time. I felt, some guilt and obligation to it as the oldest son, fifth generation. So I left New York, went to the Marines for a little while. Then I left that and went and worked in the construction company, which was fun, which was a good experience. I'm glad I did it. But while I was there, I'd had this idea for a tea to help people quit smoking. Just a behavioral thing. I'd studied the launch of Chantix and talked to doctors on the studies. And so it was kind of a nagging idea. And I started that while I was doing construction and up in Maine. And that kind of took off actually pretty quickly and became a full-time job. So I did that from about 2010 to 2019 and grew it into a whole consumer wellness company and sold it in 2019. Then I was starting to run for Congress. I'd moved to Florida with my now ex-wife, and I was running for Congress down here and getting ready to announce. I hadn't announced yet, but anyway, I ended up getting divorced. And then I thought, okay, I sold my company and I'm divorced. What should I do? I'll go to business school. That'll be a fun place to hang out for a couple of years. So I applied to a bunch of business schools, got into Yale, went there. While I was there, I started another company called Sense Relief, a digital therapeutics company, and raised some money for that. Worked with a team mostly out in San Francisco. That went pretty well, but the other co-founders in that were raising tons of money for their other startups, so they left me alone, and I couldn't really take that anywhere. It's still ongoing, and it's still running, but I haven't really done much with that. After Yale, I thought I need a more stable career, but I'm an entrepreneur, and so I'll never get a real job. And so I started raising money for a search fund. I don't know if you know what that is. This is where you go out and buy this is very lower middle market companies, $10 million HVAC contractors and stuff like that. So I raised some money for some really impressive investors like Will Thorndike, the partner at Houstonics and stuff. He's got so many companies. But I never closed the fund because then I got an offer to launch an app and $1 million in funding from a family office to launch this app, Credible, which is a speech coaching app. So I launched that, and that was a lot of fun. But while I was working on that, I had another nagging idea that went back to Yale. I'd done this project with Roger Ibbotson, which is kind of a side project, like Ibbotson Associates, where we're just talking about ways of copying Yale's endowment in a liquid fund strategy. And I know it had been done before. Mark Yusko tried this about 20 years ago, and it was tricky. And Roger thought it was a terrible idea in practicality, but an interesting intellectual exercise. And I thought this could sell pretty well, especially if I have the ticker symbol Yale. So I found out that I could get it, and I got the ticker symbol Yale and was working on launching this ETF with Tema ETFs based out of London. Maurice Pott was a friend. And then I found this family office that was interested in doing a 351 exchange into this multi-asset ETF. And I thought, that's kind of cool. Maybe I could really launch with some assets if I get a few people that want to do a 351 exchange into this. So I put up the website, 351conversion.com, and within a month, I had dozens and dozens of signups from investors and ETF issuers all looking to connect with each other. And I realized the better opportunity is a platform to connect the investors with the advisors looking to do these 351 exchanges. And that was
Wow.
less than a year ago, and now I've got ExchangeFi.
So before we go down the rabbit hole of ExchangeFi and all of that, one last question in terms of your career trajectory so far. Obviously, it's been an interesting one, definitely. So when you kind of sit here talking to me, when you kind of think back of when you first graduated to where you are now, what are the kind of the learning experiences you've kind of gotten, and what advice would you give to your 21, 22-year-old self who was just starting off in life now?
I was really anxious a lot about working on the right things. Um, and you hear it a lot from people who are very set in their careers and a lot older. They always tell you that things tend to work out. I am telling myself that a lot right now as I'm launching a new business. I think that's good advice because you don't have the counterfactual, so you don't really know how things could have worked out in another way. But I I actually do some mentoring at Yale and Colby. Yale's Sci-Cities for their entrepreneurs, all entrepreneurs around Yale, and then Colby has this Halloran lab. And so as I'm talking to these young people in school about doing startups, I always tell them a couple of things, which I wish somebody had told me. You don't really need to have a startup idea to be an entrepreneur. Just go work. If you really want to be in startups and be an entrepreneur, go work in a startup and you'll get your network, you'll get a great experience, you can be entrepreneurial at a startup, and you never know, you might get lucky. I know people who were, just happened to be employee number 6 and an assistant at a startup, and now they're retired at 30 because the thing blew up and they're in. Oh, so you could, it's like a little bit of career gamble and risk at an early age if you're really drawn to that. But also too, if you're at a school like Yale or Colby, name brands on your resume when you're young also really help. And you can always go start a company. You can't always go back and get a name brand on your resume. That doesn't work. All these job applications and big corporations say we want a self-starter, an entrepreneur, but they don't mean that. They really don't.
Yeah, yeah, it's tokenism, right?
Yeah.
Yeah. All right, so 350 exchanges, 351 funds. So explain to the listeners what ExchangeFi kind of is, what kind of problem you're trying to solve, and why do you think, like, why is there an opportunity in the ETF market for this right now?
Well, I think this is very early days for 351 exchanges. I think the opportunity is one, a lot of people have been tax loss harvesting for a long time. I think parametric makes this possible, right? They've sold everything at a loss and now they've got this portfolio they don't know what to do with. I think market beta is very cheap and good. So people focus on the things that they have more control over, like portfolio risk and taxes. And 351 just sits right in the middle of all of this as a very simple solution to solve a lot of problems for advisors. Like I said, I realize there's no place for advisors to easily find all of the 351 exchange opportunities, and there's no place for an ETF issuer who would like to launch an ETF with some seed capital with a 351 exchange to find all the advisors who are looking to do this. And so that's why I think the timing of a platform is really good. Nobody else is working on this right now. There's lots of service providers in the ETF industry, and they're all very happy to help you launch your ETF. But they'll all say, oh yeah, we'll do this, we'll do your accounting and trust work and all that. But you bring the capital. And I'm the only one helping them find the capital.
So,
I also realize in this whole process, being entrepreneurial and having done things in tech and other spaces too, and understanding finance a little bit, but there's a good opportunity to apply software to this transaction. So by my estimates and some research done with Brent Sullivan and his database, it's maybe been 100 of these done, a little less than 100. And the whole thing, billions of dollars of security get transferred around on spreadsheets. And I thought I could help simplify that process and ensure compliance and help people understand it and feel more comfortable with the whole transaction. And the simpler it is, the more people will do it.
and like, where did the idea like originally come from? Was it an observation of the market you had, or somebody mentioned something to you, or a combination of various things?
Well, just learning about it as I was working on launching that ETF,
Yeah,
I learned about 351 exchanges. Had a conversation with Wes Gray, who's
yeah.
great. Alpha Architects is really big in this, and they were promoting the idea. Then I went and found the family office that was interested in this, and realizing the traction and the demand from both sides of this transaction, I realized that a platform is the best opportunity for me right now. It's very difficult launching an ETF, but I'd love to get back to this Yale idea eventually. But now I'm just working on the platform, and then the software part. If anybody has worked on one of these transactions with spreadsheets themselves, they know it's really complicated. I mean, constant market prices change constantly, and you need to to constantly refresh your portfolio all the way up to it and change the shares that you're exchanging. So the software on ExchangeFi is uses proprietary Python script and multiple live financial market data feeds. Um, if you're doing it by yourself, you have to look at everything on the tax lot level across multiple accounts. You have to do the look through to the underlying holdings of ETFs and closed end funds. You need to combine all the positions, but looking at all the different accounts you have and share classes. And if you were to try to do this yourself in Solver, in Excel, you have to set up all these constraints and make sure you didn't screw anything up. And then once you've got a rough optimal solution, you have to put everything back in the right format. So it's nearly impossible to do this at scale with large accounts and for multiple clients. So that's why the software just makes it so much easier because you can just set up your portfolio and constantly refresh it up to the date of the exchange, and then you know that you're in a much better spot to make sure this is a compliant transaction.
Got it. So you said a while ago the problem you're trying to help solve is match capital with issuers. Is that correct?
Right. There are lots of reasons to do one of these 351 exchanges, and it can take time for an advisor and their client to get comfortable with it, and they might not have an immediate need, but might have a need at some point in the future. And there's constantly funds getting launched, and there's constant needs for a 351 exchange. And so I wanted to build one central place where everybody can match up and do these transactions in a simple, compliant way when it's right for them. Uh, yeah, I mean, what was I going to say? The funds are, constantly looking for capital, seed capital. That's one of the hardest things about this is that, if you launch an ETF, you're launching with zero and you have to go out and market it. And if you don't have seed capital, you have a lot of expenses and it's very difficult to get distribution. So for them, this is an easy sell. So it's the easiest thing I've ever had to sell as an entrepreneur
Really?
to get the funds to list on the platform and connect with advisors. Um, yeah.
What's the reason? Why do you think it's been so easy? Like you're basically like a broker, right? So because you just tapped into something, as you said earlier, you tapped into something that nobody else is doing, or what's the underlying reason you think?
Yeah, I mean, it's really difficult to go out and create this marketing machine in the ETF business. I mean, you're an expert in it,
Yeah.
and a lot of people are, especially in the finance business, and they're not good at marketing. And you have to go and connect with people in a timely manner. I mean, your fund has a launch date, and you can really only do this 351 exchange in a window between the effective date where you can go out and market the fund and whatever your launch date is. And you can close the launch date, but you also don't want to wait too long because then everybody who's been interested in it up until that point might go find other opportunities or miss the window for the reason they wanted to do the exchange, whatever that is.
Mm,
And so you just need the volume on both sides, funds constantly launching and offering this 351 exchange opportunity, and advisors constantly looking for deals. And that's what I'm seeing on the platform on ExchangeFi. I'm getting 5 to 10 advisors signing up a day, looking for opportunities for often multiple clients at a time.
wow.
Sometimes really big chunks of capital, and then funds planning out their launches, and they have to have a contribution deadline, all the paperwork's submitted and all the portfolios are submitted, and then they actually have to go do this transaction, which takes a week or two to get the securities
Yeah.
reconciled and transferred around, and the new ETF shares created and then transferred back.
Um, the ETF, like from my observations of the industry, the ETF market is very good at like tapping itself on the back, saying, "Oh, we're true innovators in the world of finance." When it comes to like, because I guess Section like 351 exchanges are still like relatively new. Would you classify this as like real innovation in the ecosystem right now?
I think it is. You're right. The
Or is it
Section
a kind of a
351.
loophole to something?
Yeah, it's been around for a while. It's only been more recently applied to the ETFs. And I think you're right because the ETF industry is so big, and because it's the best place to hold your capital. So much money's going into it, so that's where all the innovation is. That's where all the entrepreneurial activity is around it. And I would call this an innovation, even though it's an older provision in the tax code, just because people are figuring out systems for this. Like a lot of the big wirehouses have had systems where they'll go through the fund approval process after it launches. And now they're starting to lose clients because they want to do these exchanges and they're leaving the platform. So they have to figure out ways of doing due diligence on funds before they launch. I'm building software to replace the whole spreadsheets of the transactions and ways of making it up and the transaction optimal and compliant at the same time, and making it easier for advisors to sell their clients on it by showing them the market value, the new ETF shares they'll create, the analytics on the portfolio, the taxes that they'll defer. And so that's why I think there is a lot of innovation around it, even though this is just a very boring old tax code provision.
Yeah, yeah. Like a lot of the stuff I've kind of read about it is that, oh, this is just a tax loophole. The SEC is gonna like close this at some stage. Does that kind of risk exist or not? Or are people kind of misinformed?
I think there's a lot of hesitancy around it because of all the gray areas.
Mm,
And people are looking at 80 years of statutory precedent. So a judge looking at the laws on the books and saying, this is how I interpret them. So there could be different ways of interpreting them. That doesn't mean the transaction is going to go away unless there's an act of Congress, because this has been a law on the books for a long time. But the gray areas are people don't know what types of securities they can exchange. There's a lot of questions around crypto and private shares and mutual fund shares. They don't know how closely the strategy needs to align with the fund that's been approved in the prospectus. So does it need to, does all the securities transferring in need to align perfectly with the fund as it's supposed to exist, or can they take in 20% that doesn't quite align, or can the percentages be off? Then how quickly the fund can rebalance. Um, can it be done into an existing ETF? I mean, people don't know these things, and everybody's kind of sitting around waiting for some enforcement or further guidance from the Treasury Department about this. I don't think it's going away, and I keep kind of thinking through the logic of this. What they really have an issue with is trading out of the portfolio day one, because it's not like these positions are just sitting in brokerage accounts. They're not going to collect taxes on it, because no people aren't going to sell those. If they move them into the ETF, at least they can, the ETF can trade them tax deferred. They'll get paid eventually because the cost basis stays the same, and eventually people will have to sell their ETF shares and pay the taxes that they owe. But what Treasuries really, if they're talking about controlling the 351 exchange, they're talking about actually the 852b6, the the swapping of shares between the ETF and someone else as a tax deferred swap and not a sale. And if they do that, if they go after that, they're actually going after the entire ETF industry. And I don't think there's an appetite for that. I think investors and everybody kind of realizes that the ETF industry is actually a much more fair way for investors to have money in a fund
mm,
than the mutual fund industry. Because, it always seemed kind of unfair that you haven't sold any of your mutual fund shares, but you might get a tax bill from them just because other people sold shares or sold some of their mutual fund shares, and then they had to sell shares and distribute capital gains. So I think that people recognize this is the fair way to do it, and it's complicated, but it'd be really nice if they did say, here's how quickly we would like to see you trade out of your existing positions, or here are the things that you can exchange and how closely it should align. And that's when you'll see a lot larger institutions get involved in this. Because I mean, I've talked to them all. They're all very interested in it. And they all want to know my opinion, like I'm some kind of legal or tax expert. And I mean, I spend a lot of time talking to people, talking to lawyers, talking to regulators, people who've left Treasury about this. And I mean, I do hope for some guidance because that I think was going to open the floodgates on this.
Got it. From an issuer perspective, like from your opinion, what separates firms that are kind of genuinely positioned to really benefit from this versus those who are just kind of on the sidelines observing?
So the issuers, like I was saying, it's a real win-win-win for everybody. So the fund issuers get capital from day one. They can cover their costs and they get better distribution because they're meeting some of those AUM thresholds that get met to, to get on the big wirehouse platforms. And then the advisors win because they're giving their clients a really valuable non-commoditized service, and the investors get to move capital into an ETF, which is the best place to hold their capital. I love it because there's a lot of funds out there that I think deserve to exist, but just never quite met that AUM threshold, and they were bleeding money and had to close down. Um, like one of my favorite examples, they're still around, thankfully, because I own some shares. NSI, like I really think these guys did the emerging markets index right. They went through, they took out every emerging markets company that was sanctioned by the US government or did business against the US government. I thought, oh, that makes sense. That actually is a good investment strategy. So, if they were able to launch with $100 million, I feel like that would be, a multi-billion-dollar fund right now rather than launching with nothing and struggling to get to $50 million. Um, it feels a bit random in the ETF business. And so I like that good strategies from day one can provide this opportunity, gather the assets, and then grow from there. I mean, you're an expert in marketing these funds. I feel like if they have a unique strategy, and they take the time to market their strategy on ExchangeFi to investors who are looking for this 351 exchange opportunity. They launch with some decent AUM. They have a good marketing plan with Blackwater, and these funds deserve to exist and can do well from there.
Absolutely. So how big do you think this segment of the industry can get, and like what does kind of success look for Exchangify ultimately?
I have to pitch this a lot as I'm raising money and talking to potential partners about this. So I think this could be huge. I think of it like hundreds of ETF issuers, thousands of asset managers can all launch ETFs. I love this Matt Levine quote about how any trading strategy now can get packaged into an ETF. And I think that's great. I've talked to a lot of hedge funds now that want to launch they have their hedge fund and now they want to launch the strategy as an ETF. And it's great that retail investors can get access to that. And that's why there's so much money going into ETFs, with like $1.5 trillion last year, and that was mostly cash. So if I can really operationalize this 351 exchange transaction, they can move old accounts that are just going to sit there into ETFs. That'll really accelerate the flow of capital into ETF funds. And like just the dollar value of these is crazy. There's $4 trillion in SMAs sitting out there. I saw there's $1 trillion in direct indexing now. Top 10% of wealthiest Americans have $45 trillion in stock market wealth. There's over 1,000 ETFs that launched last year, and I think a third of them are 3-5-1able. So this has the opportunity to be really massive once the gray areas clear up and the whole process is a lot more seamless and easy to do.
But you, like you're, as you said at the beginning, like, you're a serial entrepreneur. So it's the idea that you build it, you make it successful, and then you sell it or whatever with it, and then go on to the next idea. Is that how you plan to ride this wave?
We'll see. I've already had a couple offers to sell it, but it's very early days, and I think it should be independent because I like to think of this as being a open source platform. I can work with everybody in the ETF industry, every service provider, and I think it should be independent because this should be a natural monopoly, two-sided marketplace. Every fund sponsor wants to know there's one place where all the advisors who are looking to do a 351 exchange are. And every advisor wants to know there's just one place where all the funds offering a 351 exchange opportunity are. So I'd have to find the right offer. But I also think this one is really exciting for me because there's just so many places that I could take this from here. And right now I'm really just focused on making the software perfect and very easy to use and self-explanatory. But I've got a lot of ideas and places where I can take this one for sure. Yeah.
Cool. Sounds awesome.
Yeah.
So, last question from me. If you weren't doing this or what you're doing right now, what would you do with yourself?
I I'd started running for Congress before. I'd probably be doing something in public office.
Yeah.
I think that's a great way to serve and give back. It's really tough, just the scrutiny and the travel schedules and all of that. And we need really good people doing it. And I don't not that I'm like the smartest or best person out there for this, but I feel like that's a great way to give back. And there are really important debates happening in politics that really deeply affect people's lives. I think politics kind of isn't like business. It's in business. I always think that if Steve Jobs hadn't invented the iPhone, somebody else would have. And but in politics, you need people making decisions in a timely manner, and you need the right decisions to be made, or you're affecting the whole course of history. It's not like you get to redo those things. So it's very important, and I think that that would be my way of giving back, and that's what I would focus on.
Well, I hope you get to scratch that itch at some stage in your future career. So,
Thank
Matt,
you. Absolutely.
this has been really insightful. Real pleasure to have you on the show. Thanks for your time.
Thanks for having me. It's been great speaking with you.